What's going on, everybody? It's your boy C-Zar, and we are talking about a hot topic in the world of finance these days, and that is in regards to the Federal Reserve interest rates. Okay, I know a lot of people have opinions on this, and I think these opinions are based in what they hear from the media. I don't know if they're actually based in anything that's logical or backed in data. So that's what we're going to do in this video. We're going to see if we can form an opinion that's strictly based in the data. I have my own opinion. We're going to look at the data together and see if we can come up with something that is coherent to something that is logical, backed in the historical evidence that we've seen with the United States interest rates increasing, decreasing, stagnating, and in regards to what the stock market has seen, right? What the markets have responded to in these regards. So if that sounds good to you, hit the like button, subscribe if you want to see more content like this. Without any further ado, let's get into it, my friends. So here is the United States United States Federal Reserve interest rates chart, okay? It's on a monthly scale. They update it once a month, right? There's times where it hikes. There's times where it moves down. That was my daughter yelling, if you hear that. There's times where it's stagnant, and stagnant at low levels, stagnant at high levels. We've definitely been stagnant now for quite a while. We're going to overlay this. We're going to click compare to the S&P 500, okay? New price scale here. I'm going to put it in log, just so that it looks a little bit nicer, okay? We can have it overlap. That's fine. I'm okay with that. We're going to go back in time, okay? I want to point some stuff out. So looking at this and how it responds, if we notice here, interest rates here did from a high to a low, they did kind of correct right here. If you notice, we dropped interest rates really fast. So what happened? The market actually crashed. Now, it had already begun crashing, in all fairness, but it crashed. I would say that the pace in which it crashed picked up a lot once the interest rates dropped. And they dropped here from a 13.4 basis points, or I guess that'd be 1,314, whatever. What is that? That's 13. I guess from a 1,300 basis points, right? Dropped all the way down to 9.25. That's a lot. That's a lot, you guys. It's a very quick drop right there. And then here, a little bit more gradual. Still very intense, but more gradual compared to this. And we actually had a little bit of a bounce in the markets, right? As interest rates level off, so does the price, right? We start to increase. As we start to increase, we begin to increase, the market corrects, but inevitably the market's actually moving up as interest rates are moving up too, okay? We get a bit of a quick drop in interest rates right here, and if you notice, the market actually crashed right here too, alongside with the interest rates dropping. Do you see that? Here, we're climbing back up with the interest rates, and the market is starting to climb up too. The market, the S&P, topped off right here when interest rates stopped hiking, and as we're rolling over, starting to come down, the market came down again, right? Are you noticing a trend here? Are you noticing that when interest rates drop, especially initially, we get a market crash? Do you understand? Do you see what's going on here? And not every time is this the case, but it depends on how it happens. Notice here how the interest rates are dropping now at a gradual pace, okay? It's not this quick dive. And as we have a gradual pace going down, the market is actually recovering. It's actually moving up throughout this whole time consistently as the interest rates are dropping, lowering slowly over years. Slowly. That's the key point. Interest rates dropping fast causes the market to correct both times. And here it was actually a very insignificant correction, but still a correction nonetheless, right? I mean, from a reading of about 116 down to 103 on the S&P, that's a pretty significant drop for the markets in the course of like a couple of months' time, right? It's a little bit of a crash, but nothing too crazy, right? Slowly, gradually, the market actually starts to grow. You see, it's a little bit different there. Whenever we come here, again, here we're seeing a drop in the interest rates. It's picking up the pace a little bit, but it's a lot slower than what we had here, where we just kind of fell off a cliff, right? You see this back here where we just fell off a cliff. This is a little bit more gradual. And with that gradualness, as we pick up the pace a little bit, you might see that the market crashed a little bit. But as we slowly, gradually drop down, the market's actually increasing, right? And we pick up the interest rates, the market's still growing. So just because the interest rates go up or stagnate, that actually doesn't prevent the market from growing. Here in a moment of stagnation, the market might not be as robust, but it's still growing over time. The only time that I've really seen the market crash, at least from what it seems, in my opinion, has been here, right at the top where interest rates began to drop. Okay, and that actually wasn't that significant. Here, when the interest rates dropped significantly, we had a little crash. Here, when the interest rates dropped significantly, we had a little bit of a crash as well. Okay? Other than that, we're moving up. We go back, we keep going in time, forward in time, and here, notice how much faster, right? Look at this. Look at the slope of this, the interest rates declining, versus this here. Notice the slope. It's a lot faster. That's a lot faster of a rate cut in a series of time than what we had back here. And what happened with the markets? we went into a bit of a recession, right? We saw a little bit of a correction there, right? A little bit more of a correction. And we actually bottomed out in the markets as we stopped dropping the interest rates as dramatically, right? So they still dropped pretty fast here, but they weren't dropping as much. It wasn't like a straight cliff dive like this. Notice that the next time that we dropped interest rates at a very fast pace, the market saw a massive correction, absolutely massive. In fact, these massive corrections only seem to really correlate with the market. These prolonged massive corrections only seem to correlate with these massive corrections in the interest rates, right? We're moving up here, we're hiking, we're even stagnant, and the market's overall going up, right? Interest rates going up is not necessarily good for a weak dollar, and a weak dollar is good to stimulate the economy and all. I get that, but understand here, even this little crash right here, pretty significant crash. That was like the most significant crash that we had since 2008. It was right here in 2019, 2020. That happened initially, same kind of when was that? Was that during Trump's first term? I think that was during Trump's first term. We dropped the interest rates fast and the market corrected. Then it ran, and then of course it ran, right? And these little corrections might happen. I'm not necessarily expecting anything too dramatic to happen, but understand, you guys, if we do get the interest rates to drop, if Jerome Powell is actually resigning and somebody who Trump appoints is put into the Fed, and we know that that means that the interest rates are going to drop, we're probably going to see the markets correct. For how long? I don't know. None of these corrections lasted for just 1 month. They were multiple months, a quarter of a year, if not more, in time of a corrective phase. And they're pretty harsh whenever they come, relatively speaking. If we throw on Bitcoin, not that Bitcoin has as much history as the stock market does, but BTC USD here, go to the all-time history index, new price scale. We throw that on there. We put that in log as well. Logarithmicize it, right? Whenever we had the interest rates drop really fast, we hadn't really had that happen at all for Bitcoin. It's either stagnant or up, and then here we had a quick correction. During this quick correction, Bitcoin actually handled this correction well whenever it came to the interest rates, right? Compared to the stock market, we actually handled that well. And this was also, I think this was also during the COVID crash, in all fairness, but interest rates dropping, COVID crash, all kinds of bad things. Bitcoin actually handled it pretty well from an open to closing standpoint on a monthly basis. We did have a shakeout there, but it handled it pretty well compared to the market. So it's compared to the stock market. So we might be a little bit more resilient, and we've definitely shown resilience here recently. But if we start to drop, we really start to cut these interest rates, I'm a little bit concerned that that could put a stop in the pace that the stock markets and the cryptocurrency markets are having, right? I know a lot of people, and that's kind of the main point. I don't know if there's really anything else that I need to say with these charts here. That's kind of the main point. I feel like we went through everything. There's not really anything else to see. And I mean, we could go in depth on different forms of this chart, but we're just really focusing on the corrections mainly. A lot of people want to see the interest rates drop. They want to see that happen. They want Jerome Powell out. They want somebody new in charge who will play ball with Trump and drop the interest rates so that the U.S. can refinance its debt. But every time we've dropped interest rates, the market gets shaky. The market gets spooked. And that's okay. It could be for a short amount of time. It can be for a prolonged amount of time. I don't think that it would be a prolonged amount of time in this sense, because I don't think Trump is trying to drop the rates too low. I think he said 100 basis points, right, which would be from 4.5 to 3.5. So it's nothing too crazy, right? The drop that we're talking about would just take it right here. It's like right there. It wouldn't be too crazy. But the idea that Jerome Powell is too slow, or that he's not doing his job, or that he's incompetent, I think it's a bit of a fallacy. And I don't think that people really understand him. And maybe I don't either. I'm not an economist. I don't claim to be an expert. But just looking at the data, I think Jerome Powell knows what he's doing. And I think he's fully aware, as I am, as we all are now, that a quick drop in the rates, not a gradual drop over time, is actually bad for the economy. And he's been very, very, very adamant about creating a soft landing. They've been trying to create a soft landing from this recession that we had with the Biden administration, right? A lot of people might not accept that, but you guys have to understand, we had a full-fledged recession from 2021 till 2024. We basically did. Like, it was mainly 2021 to 2023, okay, late 2021 going into 2023. But I want to say, even into 2025, we're still dealing with the aftermath, right? But things are on the up and up now. If you don't accept that we're in a recession, just understand the Biden administration had to literally change what the definition of a recession was, because historically it's GDP reporting negative growth 2 quarters in a row or something like that was what defines a recession. And once that happened, they're like, oh no, that doesn't count anymore, right? The administration that used the media to manipulate a bunch of different things. Now if you go back and you try to type this in, you look this in, you look this up on the internet, it'll say, well, that's not actually true. The economists don't say that. That's BS. Economists that have been alive, if you're in your 30s or younger, economists that have been alive and doing this before you've ever been born have all known that 2 quarters in a row of negative growth in GDP is actually a recession. That's what that is. That's a hallmark of a recession. And that happened in the Biden administration. And I don't know if anybody was paying attention, but the years from 2021 to 2024, it was pretty freaking rough, man. People were not like spending in surplus. People were like, money was tight, and things were not good. Things were definitely not good. It wasn't a loud recession. It wasn't something that was like historically terrible, but it was kind of like a silent recession, I would say. I don't know. Things were bad. Things were really bad. I feel like things were bad. The market was not good. Nothing was good, man. Things are on the up and up now. Things are definitely on the up and up now, but we will have a little bit of a correction, if not a full-fledged recession. And maybe not a recession, but a bear market, if these rates are cut in an improper way. And that's really all I wanted to say, is that the best thing we can do is to be too slow with these interest rates. We want to do it gradually, not all at once, not diving off a cliff. I don't think 100 basis points. I think Trump, might be onto something with cutting 100 basis points. I don't think that would shake out the markets too much. But the reason why I think it spooks the markets is it implies inflation is going to increase. When inflation increases, we've seen how that goes, right? Looking back at COVID, whenever we were at like really record high inflations across the world, it's not good. It's definitely not perceived well in the economy, and people they get out of risk on assets. So we want this to be a slow, gradual thing. I think it's good that the Fed has been so reluctant in reducing interest rates. I think in time they will, but it has to be slow and gradual. I don't have anything else that I want to say. I'm just repeating myself at this point. So hit the like button, subscribe. Thank you all for being here. And just understand that things might not be what they seem with this. I know Trump's very adamant about cutting interest rates, but and people are adamant about getting Jerome Powell out of office because we love Donald Trump, and even if you don't like him, maybe you don't like him, whatever, but a lot of people do, and and we just think that what he says is educated and informational at all times, but that's not always the case. He can be wrong about things, and contrary to the popular belief, I actually think that Jerome Powell's a really good Fed chair. And maybe he's politicized, maybe he's not right now. I think he's gotten a little bit political with this, but the point remains the same. I think he's doing a good job, and I think that things might have been much worse in the last administration if it wasn't for Jerome Powell, actually. So credit where credit's due. I don't know. That might not be a popular opinion, but it's my opinion nonetheless. I got nothing else for you guys. Hit the like button, subscribe. Thank you all. Take care. Bye-bye.